Hi, I'm Keon, a senior research analyst with Thomson Reuters Lipper, and I'm here to speak to you about the fund flows activity for the week ended Wednesday, May 3rd. We'll start by taking a quick look at that week's market activity. The broad equity indices were basically flat for the week. The S&P 500 managed a small gain of 0.03%, while the Dow Jones Industrial Average retreated slightly, minus 0.08% for the trading week. In economic news last week, the Federal Reserve did not raise rates at its early May meeting, but did forecast that a rate hike is still possible for its mid-June meeting. The Fed was especially bullish in its post-meeting statement regarding the first quarter GDP results, which came out last week, which were the worst in 3 years. They stated that they believe the results were transitory and the economy is still moving along in good shape. All right, let's turn our attention back now to the fund flows activity for the week. We'll start by taking a look at our fund macro groups. Equity mutual funds saw net outflows of $5.3 billion last week. Taxable bond funds took in $1.3 billion in net new money. Muni bond funds had net inflows of $149 million, and money market funds had net outflows of $302 million. Let's take a look at each group a little bit closer now. We'll start with our equity mutual fund group. The $5.3 billion in net outflows was the sixth straight weekly outflow for the group and brought their year-to-date net outflow to just about $21 billion. Once again last week, domestic equity funds were responsible for the majority or the lion's share of the net outflows. They had $5.5 billion leave last week. So far this year, domestic equity funds have had net outflows in every week, total outflows of just over $30 billion for the year to date. This continues a long-term trend going back where they've had net outflows of almost $230 billion in 2016 and have seen money leave in 64 of the last 65 weeks. On the other hand, non-domestic equity funds have bounced back somewhat this year. After net outflows of almost $30 billion in 2016, they've taken in almost $9.5 billion in net new money so far for the year to date. Let's move on to our next group to take a look at now, which is equity ETFs. This group also had net inflows last week. They took in $1.7 billion in net new money. It's their fourth straight weekly inflow and lifted their year-to-date increase to just about $100 billion. The major contributors to the inflows last week was the PowerShares QQQ product, which had net inflows of about $1.4 billion. The iShares Core S&P 500 took in roughly $840 million in net new money, while the Spider S&P 500 ETF saw almost $4 billion leave their coffers. Let's move on to our next group now, taxable bond products. We'll start by taking a look at the mutual fund group. Taxable bond mutual funds had positive flows of $1.3 billion last week. It was their sixth net inflow in the last 7 weeks, and for the year to date, they're up just about $70 billion. Major contributors to last week's net inflows were the multi-sector income funds category and the core plus bond funds category, which took in roughly $777 million and $482 million respectively. Let's take a look at taxable bonds ETFs now. This group also had net inflows last week. Just about $260 million in net new money came into their coffers. It was a seventh straight weekly inflow for the group. Year to date, they're up just about $38 billion. Major contributors to the inflows last week was the iShares iBox investment grade corporate product, as well as the iShares JPM US dollar emerging market bond product, which had net inflows of $412 million and $175 million respectively. On the sell side, we see the iShares iBox high yield corporate product had net outflows of just about $414 million. Moving on to our next group now, we'll take a look at the Muni bond fund group. Net inflows here last week as well. The group took in roughly $149 million in net new money. It was the sixth net inflow in the last 7 weeks for Muni bond funds. Brings their year-to-date net inflow or positive flow to just about $7.5 billion. The National Muni category is responsible for all the net inflows last week, as we've seen for most of the year. They took in $225 million in net new money, with the short Muni debt fund group contributing the most to the inflows with about $182 million in positive flows. That brings us to our last group now, money market funds. Somewhat muted week for this group. We've grown used to seeing either positive or negative moves of over $100 billion. This week we only saw net outflows of $302 million. It was the first time this year where the move was less than $1 billion. The major contributor to the net outflow last week was the institutional U.S. government money market products, had $3.4 billion leave, and on the plus side we saw institutional money market, and U.S. Treasury money market taking about 1.1, $900 million, and $400 million respectively. Well, that wraps up this week's report. If you'd like to take a closer look at the data for yourself, please go to our website at www.lipperusfundflows.com. And please join us here again next week where another one of our analysts will be speaking about that week's fund flows activity.